Injective protocol, can it reach $100 per token? This project's been on an absolute tear over the year, up over 500%. So here's everything that you need to know about this protocol and why it could change DeFi forever. It's time to discover crypto. So what is Injective? And why has it been pumping so much? Injective is an interoperable layer 1 blockchain optimized for building Web3 finance applications like decentralized exchanges, lending and borrowing protocols, and derivatives markets. It is built on the Cosmos SDK, aka Software Development Kit, and its Tendermint consensus architecture, which gives it fast and cheap transactions, as well as make the blockchain interoperable through the use of the Cosmos IBC protocol. It also uses Ethereum virtual machine compatibility. Injective is attempting to bring the low fees, speed, and cross-chain trading of centralized exchanges into a decentralized permissionless environment. It was the first Cosmos blockchain to offer fully decentralized order book infrastructure. Now, Injective was founded back in 2018 by Eric Chen and Albert Chan, who now serve as the CEO and CTO of the umbrella company Injective Labs. They were first backed by Binance Labs. They then went on to raise over $50 million in 3 funding rounds. First in July of 2020, where they raised $2.6 million in an initial seed round. Then they raised $10 million in an April 2021 funding round. And finally, they added an additionally $40 million to the pot with another funding round in August of 2022. They also did the Binance Launchpad in October of 2020, where they ICO'd, selling 9% of their total supply for 40% of the tokens. Then in 2021, they released their mainnet and launched their smart contract platform. Injective has investors like Binance, Pantera, Jump Crypto, Mark Cuban, and many more. Ignore Mark Cuban's NFT plays. The Injective blockchain holds decentralized order books, which provide liquidity to the DEXs, a trade execution coordinator, and a bi-directional token bridge and EVM execution environment. Any dApp that is built on the Injective blockchain has access to all of this. And the blockchain is public, so anyone can build a dApp as long as it's approved by the governance. While some DEXs use an automated market maker formula to manage liquidity, Injective uses an order book model that is similar to centralized exchanges. This means that the DEX on Injective doesn't need gas fees, so users only have to pay market maker and taker fees using INJ. That is where the utility of the token comes in. There are tons of applications in the Injective ecosystem, but we're going to be just going into a few. Injective's most popular dApp is a cross-chain DEX called Helix, which stands out from the crowded DEX landscape by offering unique features like zero gas fees, stop-loss orders, trading history, and reward tracking. These elements give Helix the positives of a centralized exchange with privacy and safety of a decentralized environment. Helix can natively support a ton of assets like Cosmos, Ethereum, Solana, and Polygon, and has an easy-to-use interface where you can connect a self-custody wallet or send your assets to your Helix portfolio. And people seem to like using Helix because it becomes one of the fastest growing decentralized exchanges since it launched in September of 2022, when it reached over $1 billion in cumulative trading volume after just 1 month. So make sure you smash that like button if you're an INJ holder. Not only have you seen a 500% growth year over year, you guys continuously change DeFi in a positive direction. Currently, Helix has over 13 times that cumulative trading volume across all its spot and perpetual markets. And Helix just launched its pre-launch features feature, which allows users to trade futures on tokens that haven't even launched yet. Now, this is probably part of the reason Helix is pumping, because this additional service allows users to speculate on upcoming coins without having to gain access to pre-sales or launch pads. Helix has marketed this as an attempt to level the playing field for the general public, since venture capitalists and wealthy insiders are typically the only ones who have early access to projects. Now, what else is in the Injective ecosystem? Mito Finance is another one of Injective's popular applications. Mito Finance is a DeFi trading platform that aims to democratize finance and increase profits through automation. Mito utilizes smart contracts to bring algorithms typically used by institutional investors and hedge funds to the common man. You just sign up for a vault and earn rewards, and Mito also has a launchpad that makes token creation incredibly easy. Now, while that might not be my favorite application, it is true. Institutions utilize MEV bots and have ways they can profit that retailers will never be able to access in their lifetime. Thanks to yours truly, Gary Gensler, regulations get harder and harder for retail traders over time. And then there's Frontrunner, which is a decentralized sport prediction market. What's cool about Frontrunner is that it allows traders to buy and sell shares of sports propositions the same way you would buy stocks. Now, you can buy and sell these positions in real time as the odds change. Like I said, there's a ton to explore in Injective's ecosystem, so go to their website and see what you want to learn about more. Since its launch, Injective has been chugging along with one improvement after another. In January, Injective launched a fund of $150 million to accelerate the interoperability between blockchains to enhance DeFi adoption and expand its ecosystem. The following March, Injective launched a testnet for Solana-based apps. And then just a few months later in September, it released a testnet for its EVM layer. This is a two-part solution that will allow Ethereum applications to now natively run on top of Injective. The other piece of exciting Injective news is that Injective will integrate into Google Cloud's Analytics Hub, joining the ranks of major Layer 1 blockchains like Bitcoin, Ethereum, and Litecoin. This means that anyone using a Google Cloud server will be able to interact with the data across the Injective network. CEO and co-founder Eric Shen said that the Google Cloud team has played an integral role in the growth of Injective since its inception, and that this latest collaboration will help take Web3 as a whole to new heights. Now, all of these developments have led to the price of Injective just going through the roof in the past few days, going between $7 and $8 at the beginning of October to now nearly $17 in just last week. So if you're an INJ holder, congrats, because your bag basically just tripled. Now, what's interesting to me is that while other crypto projects are struggling to regain just a quarter of their previous market cap all-time highs, Injective has already shot past that halfway point and is approaching a brand new all-time high. So this makes me wonder, is Injective not only going to break its all-time highs while we're still coming out of a bear market, but is it going to just surpass them and show significant gains coming over the next month? Other than being a great investment vehicle, what are other use cases for Injective? The blockchain uses a proof of stake model, so staking your INJ can help secure the network, and currently staking rewards are pretty sweet. Coming in at just over 16% APR, you get to choose one of their 126 validators and start earning free INJ. Currently, there are almost 45 million tokens staked, about half of the circulating supply. And now remember that staking never comes with zero risk, so make sure you do your own research and don't go to staking your savings. Now, perhaps one of the best reasons behind the INJ pump is going to be the tokenomics. Over the bear market, their vesting schedule released the majority of the supply into circulation. Now seeing roughly almost 89% tokens in circulation, this goes to show that there's not a lot of dilution moving into this next bull run. So if we have all of this development, all of these DeFi applications, and all these integration, that means we can see INJ continue to push to new highs without seeing VCs and insiders dump on retail. Now, other use cases include governance, and if you have a staked INJ, you get to vote on new applications and the direction of the blockchain. INJ is also used for protocol fees, as well as developer incentives. Now, there is one thing we need to be cautious about. The total supply could still potentially increase over time because Injective uses inflationary emissions for block rewards. Currently, the block time is 0.82 seconds. The inflation rate started at 7% with a plan to decrease that rate in 2% over time, but Injective also has a unique burning process that basically ties the percentage of INJ burn to the popularity of the protocols on its blockchain. So if Injective gains more and more adoptions, there's a chance that the token will become deflationary in the future. So what we need to be cautiously optimistic about is this inflationary pressure going to dilute the tokens moving into this next bull run? Because like I mentioned, there is not a lot of dilution coming from the early vesting schedules. So if we get burning mechanics on top of that from more development, I don't know what the right word is, but pumponomics is kind of what comes to mind. So what makes their burning process so unique? Injective collects 60% of the fees its platform receives from the users and puts them into a weekly auction and burn fund, where it invites people to make bids on those fees. Bidders have to buy the native token, INJ, and use that to make a bid on the assets that are on the auction block. Then Injective burns the final bids. This decreases the token supply and also drives demand for the INJ token. I know this is a little confusing, so imagine Injective auctioned $1,000 worth of an asset, and the highest bid ended up being $800 worth of INJ. Whoever won that bid would then have an arbitrage opportunity with the assets they've won, and Injective would then burn that $800 worth of INJ. This is why the level of Injective deflation is directly linked to the popularity of the protocols that use its on-chain's order book. So what do you guys think? Do you have Injective in your portfolio? Do you think this is a pump and dump, or will INJ keep flying to the moon? So make sure you turn on those post notifications, leave a comment down below, and let us know your thoughts. Is Injective Protocol going to change DeFi forever? See you at the top.